Bond investors are shifting their attention to longer dated papers, especially the 2037s and 2049s. Now, Chuka Nwachukwu, head of ALM and balance sheet management at UBA, joins me now for more market updates. Thank you so much for joining us on the show today, Chuka. Let's start off really now with the activities we've seen in the market from the start of the week up until now. It's midweek, looking at the DMO's option to oversell and then the bond auction we had earlier on Monday.
Yeah, thank you, David. Like you mentioned, we had the week started with the bond auction where 360 billion was on offer across 4 maturities of 2028, 2032, 2037, and then 2049. We saw a slight dip in the yield, especially on the 2028, which dropped slightly by about 1 basis point. This is as a result of the fact that the 2028 was the most attractive bond on offer, and then it was heavily oversubscribed. In the whole thing, we saw oversubscription about well over 770 billion on the in the whole of the the auction across the 4 maturities, like I mentioned earlier. So this the auction actually has charted the course for the trading, where we've seen slight bullish sentiment, especially on the shorter end, where those who lost at the auction tend to cover at the secondary market.
And we're also looking at investors also trying to exit their auction winnings as well. But one of the news that we just had barely an hour ago was the inflation report. How is the market also responding to that?
The inflation report, like you mentioned, we saw a slight, a rise in inflation by 48 basis points from 21.34 to 21.82. I think that the market has actually priced it in. To be honest, I feel that people really the markets had a feeling that the inflation result will slightly each up. Irrespective of what CBN has actually done, even though we saw a bit of respite in the last inflation figure. However, with the persistent oil, fuel crisis, which somehow has moderated, and then the issue of other commodities going up in the market space. So, it's not a surprise to me that the inflation figure went up slightly.
And we also had the court injunction as well. We had the resumed hearing and then the adjournment as well, which is looking at the Naira redesign policy, and the conversation has now been shifted to the 22nd of this month. Now, in terms of the dollar illiquidity that we've already witnessed now, how do you also see this also further the shape of what see in terms of liquidity, in terms of FX?
The FX, the IE, we saw about 26, 60, yeah, we saw about 67 basis point depreciation from a 4.461 figure to 61.67, just a slight depreciation. I think that it wouldn't really change anything much. The market has been like this for a time now, and so I don't really see any change as regard the cash swap policy affecting the FX market, as it were.